Welcome back, my friends. The news today is that Tesla stock has fallen off a cliff after the prominent EV maker warns production growth will be notably lower than 2023. Tesla reported revenue growth of 3% in the fourth quarter. Trailing estimates. Auto revenue increased just 1% from a year earlier. Vehicle volume growth in 2024 may be notably lower than last year's growth rate, the company warned. In terms of its full-year production, Tesla said its vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, as our teams work on the launch of the next-generation vehicle at Gigafactory Texas, indicating it would not reach street estimates of 219 million for 2024, which would have been a 21% increase from 2023. Tesla stock has lost more than 26% this year. On a call with analysts, CEO Elon Musk did confirm that the company's next-gen vehicle will be coming in the second half of 2025. In its earnings release and later on the earnings call, Tesla also mentioned progress on its next-gen manufacturing platform. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icons so that you are notified of upcoming videos when they are released. Tesla stock TSLA fell 12% on Thursday after the company reported fourth quarter earnings late Wednesday that missed estimates and issued a downbeat full-year production outlook. For the fourth quarter, Tesla reported top-line revenue of $25.17 billion against $25.87 billion expected. Revenue rose approximately 3% from a year ago. Tesla reported adjusted EPS of $0.71 against $0.73 expected. Adjusted net income totaled $248 billion against the $261 billion expected by the street. Tesla reported revenue and profit for the fourth quarter that missed analysts' estimates as automotive revenue increased just 1% from a year earlier. The stock slid almost 6% in extended trading. Total revenue increased 3% from $24.3 billion a year earlier. Operating margin for the quarter came in at 8.2%, down from the year-ago quarter's figure of 16%, and slightly higher than 7.6% in the prior quarter. Meager growth in auto revenue was partly due to a reduced average selling price, following steep price cuts around the world in the second half of the year. Net income for the quarter more than doubled to $7.9 billion, or $2.27 per share, from $3.7 billion or $1.07 per share a year earlier. The increase was mostly due to a $5.9 billion one-time non-cash tax benefit. Tesla said in its investor presentation that vehicle volume growth in 2024 may be notably lower than last year's growth rate as the company works toward launching its next-generation vehicle in Texas. The company cautioned investors that it's currently between two major growth waves. CEO Elon Musk was asked on the earnings call if investors should be uncomfortable with his stated desire to own 25% of Tesla. The question was in reference to a recent tweet in which Musk said that's how much voting control he would want before turning Tesla into a leader in AI and robotics. Musk responded by saying he doesn't want to be in the position to be voted out by some sort of random shareholder advisory board, and he floated the possibility of creating a dual-class share structure. Musk highlighted proxy advisory firms Institutional Shareholder Services, or ISS, and Glass Lewis as groups creating challenges, alongside activists that infiltrate companies and have strange ideas about what should be done. In mentioning ISS, Musk said he calls the group ISIS, referring to the Islamic State. We are focused on bringing the next-generation platform to market as quickly as we can, with the plan to start production at Gigafactory Texas, the company said. This platform will revolutionize how vehicles are manufactured. We're very far along on our next-gen low-cost vehicle. This is a revolutionary manufacturing system, far more advanced than any other in the world, Musk said on the earnings call, clarifying that the company's current schedule has this vehicle hitting production in the second half of 2025. This echoes a report from Reuters earlier Wednesday that said Tesla told suppliers it wants to start production of a new mass-market EV codenamed Redwood in mid-2025. When asked about the timeline for production of Tesla's humanoid robot, called Optimus, executives declined to give any specific guidance. Musk described Optimus as something that I think has the potential to far exceed the value of everything else combined for Tesla. He claimed that Tesla's technology developed in its automotive unit translates well to the humanoid robot because the car is just a robot on four wheels. Optimus is by far the most sophisticated humanoid robot that's being developed anywhere in the world, Musk added. Competitors in the market include Boston Dynamics, Agility Robotics, and Figure. Other robotics companies such as Sanctuary, Apptronik, OneX, Fourier, and Unitree are all working on dexterous manipulation hardware, mimicking human hands. Musk said Tesla has got a good chance of shipping some number of Optimus units next year, but he didn't specify their capabilities or the cost. Musk admitted on the call that he tends to be optimistic on timelines. During the quarter, Tesla began selling Cybertrucks to customers. The company said in its investor deck that, "We expect the ramp of Cybertruck to be longer than other models given its manufacturing complexity." Tesla said it now has the capacity to build more than 125,000 of the vehicles in a year. On the earnings call, Musk called the Cybertruck our best product ever and a head-turner. "I see us delivering somewhere on the order of 250,000 Cybertrucks a year," he said, without giving a precise time frame. For the full year, Tesla said automotive revenue reached $82.42 billion, a 15% increase from 2022. The energy division, which is much smaller than Tesla's core business, was a bright spot, with revenue rising 54% to $604 billion. The unit sells solar energy generation and energy storage systems. Tesla's services and other revenue rose 37% from a year earlier to $32 billion. Operating income decreased year over year to $2.1 billion in the quarter, with Tesla blaming the declining profits on the reduced average sales price of its vehicles and an increase in operating expenses partly driven by AI and other R&D projects. Spending on research and development increased to $1.09 billion from $810 million a year earlier, though it was down from $116 billion in the prior quarter. In its shareholder presentation, Tesla confirmed that it had rolled out a new version of its premium driver assistance software, marketed as its full self-driving beta or FSD beta option. The software doesn't make Tesla's cars autonomous, as they still require an attentive driver at the wheel. As of the end of 2023, Tesla had 54,892 supercharger connectors available to drivers around the world at 5,952 stations. Tesla shares have dropped about 16% so far this year, as of Wednesday's close after more than doubling in 2023. Tesla's drop in profitability is likely due to downward pressure on margins since Tesla began its cost-cutting efforts late in 2022. Tesla reported a Q4 gross margin of 17.6% versus 18.1% estimated, a big drop compared to a year ago and a sequential decline from the 17.9% achieved in Q3. Headlines like rental car firm Hertz shedding thousands of EVs, Tesla cutting prices in China, a 2-week production halt in Berlin, and CEO Elon Musk's ill-timed demand for more stock have also weighed on Tesla. Earlier this month, Tesla reported 484 to 507 deliveries in Q4, beating street estimates of 483 to 73 per Bloomberg. That figure represents an all-time record quarter for Tesla, nearly 20,000 units higher than its past record quarter of 466,000 units delivered in Q2 of last year. Some analysts believe that Tesla is still a good long-term investment, as the company has a strong competitive edge in the electric vehicle market and is innovating in areas such as battery technology and autonomous driving. Whether Tesla shares are dead money or not depends on your risk appetite and time horizon, as the stock is likely to remain volatile in the near future. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you're looking for a job or an employee. Thank you for watching.